Yeah.
How are we doing today? So is there any existential dread of coming Wednesday? Got the first exam coming? That I'm sure you probably
Two on Wednesday now.
two on
So
Wednesday. That's rough.
I was gonna have three, the third one got moved.
Oh, okay. Well, that's a little.
Only to Friday, but not Wednesday. On
I hear these terror stories about students who get like 4 final exams in one day and they won't get any of their instructors. I mean, it's just it's not one of those things that we do. We don't organize our exams deliberately to try to overlap them. It's not an intentional thing. It just kind of happens. I always kind of try to make sure my exams fall on Wednesday, although they don't always do that. But speaking of the exams, exam number one, we're going to be talking about some important stuff today because a lot of the content is going to come from this chapter. I think this is probably the most important chapter that we're going to be talking about with respect to exam one, though it will all be relevant. There is study guide and practice exam already posted on Brightspace. You all know my policy. Try to make sure that you complete the practice exam before you come to class. Kind of defeats the purpose if you haven't ever looked at the material and I give you the answers. So also, as before with AIS, when we're going over the study guide, I will not go over every single detail, just some of the things that I think require additional emphasis. I, first of all, encourage you to take diligent notes, but I also encourage you to think about what questions you want to ask. If there's something I don't cover, ask questions about it so that you can get clarification on it. Everybody cool? All right. Let's get to homework, shall we? All right. So let's start out with a directional test question, shall we? Which of the following procedures would an auditor most likely rely on to verify management's assertion of completeness? Now, completeness is our first assertion we talked about. One of the things with go is it's basically one of our 3 big assertions. What direction does completeness move again? I know this when I'm asking you for a clarification. So it moves from source to record, which is going to be bottom to top. Source is the foundation. Record is the information system. All right. And so that's going to dictate what it is that we're going to be doing with completeness. Now, we call it the recording assertion when I say, did something get recorded? Full stop. That's all we're asking there. So that should give us enough information and detail that we're looking for. So let's go ahead and look through the answers. Reviewing standard bank confirmation for indications of cash manipulations. Cash manipulations would kind of indicate that there's a value issue, which would be more BAA. Comparing a sample of shipping documents to the sales journal. So let's think about that for a second. Shipping documents, do those represent source items or record items? Those are source documents, an example. And then sales journal is something that goes into the system, so that's record. So source to record, which that directional test is really important to note because that's the answer, comparing sample of shipping documents to the sales journal. Observing the entity's distribution of failed payroll checks. That's actually a valid test for payroll that we're going to talk about later on in the semester, but it does not validate completeness. And then confirming a sample of recorded receivables by direct communication with the debtors. This can test completeness, but as we're going to find out when we start about confirmation later on in the semester, generally confirmation is dictated by the account that we're trying to test. This says receivables. Receivables are assets. And remember we talked about existence occurrence, saying that as a critical assertion for assets. Usually confirmations in that area will be testing primarily existence occurrence, then completeness out. So there's some argument for other ones, but I think B is the clearest one because of the reasons that we just talked about. So if completeness moves bottom to top, where does existence occurrence move? Top to bottom, record to source. Okay. Existence assertion for an asset. I had a reason for asking that. The auditor ordinarily works from, so we know we're going to talk about the record to the source documents. So we don't have to actually decipher any of this. If we look at C, it says accounting records to sorting documentation. That's all you really needed to know for that one. So remember, completeness, bottom to top, existence occurrence, top to bottom. We've got our fancy little test, and we do that. So vouching is the V pointing down, that's existence occurrence. Tracing is the T pointing up, that's the completeness. If you remember that, it'll be easy. It will be easy. Trust me, we're going to talk about it so much, it's still going to be easy if you forget that. But yeah, so that's the easy way to remember it right now, though. Which of the following types of the audit evidence is least reliable? So what is our hierarchy again? We talked about auditor generated evidence, that's the A, okay? Then external evidence, which would be like information that comes from an outside source, such as confirmations or documents that provided by the entity, but were developed outside of the entity. Then internally generated evidence, that's I, and then O, oral evidence, which is observation inquiry, and then the U, you know it. Yeah. I said that without being embarrassed today. It's amazing. AEIOU, that's our hierarchy. So let's go ahead and go through each of these. Let's go through each of these. Bank statements obtained from the entity. So that's an external document. Okay, that's an external document, which is generally high reliability. Then we're talking about computations made by I'm looking the wrong one, aren't I? 521. My apologies. So saying that these do not look familiar. All right. Pre-number purchase order forms prepared by the entity. That's internally generated evidence, which is kind of moderate reliability. Bank statements obtained from the entity. That's external evidence. That's something that comes from the external party, the bank. Test counts of inventory performed by the auditor. That's something performed by the auditor. Very high level of assurance. That's a reperformance test. And correspondence from the entity's attorney about litigation. Even though they're dirty lawyers, which you're going to hear me make a lot of jokes about that, usually at Professor Templeton's expense. Even if they're dirty lawyers, they are a third party and therefore they're external entity. So this is our lowest level, the pre-numbered purchase order forms, because those are created by the. Now, I'm not saying that these are low reliability. These are just the lowest in this particular hierarchy. Pre-numbered purchase orders are going to actually be very valuable to us, but we'll talk about why later on. All right, now, okay. Audit evidence can come in different forms of different degrees of reliability, which the following is the most persuasive type of evidence. So same idea. We're going to go ahead and just go to the answer on this one just because we got a lot to go through, but we know computations made by the auditor, that's our highest level because that's done by the auditor. Unless we had another answer that said something done by the auditor, this is going to be our highest level. By the way, it's important to note that some of these questions may be a little bit problematic. We're going to encounter questions over the course of the semester where you'll see there are possibly two answers that are correct based on our understanding. I will never give that type of question to you on the exam. It will always be a clear-cut analysis. So I don't want you to panic and say, how do I select between these two? You won't have to. I will give you a clear answer. There's going to be a clear, distinct answer for everyone. It's never going to be maybe this one, maybe this one. All right, 24. The assurance bucket, or the Chipotle assurance burrito, is filled with all the following types of evidence except for what? So what is it goes into the bucket? So we start out in our risk assessment, and our risk assessment is going to give us some assurance. Then we move on to test of controls. Test of controls is going to give us more assurance. That dictates how much substantive testing we have to do. Substantive testing has two subphases. What are they again? Substantive analytical procedures, substantive test of details, okay? So substantive analytical procedures, they may give us a lot of assurance, especially if we can develop a good expectation, but anything we can't need additional assurance on, we're going to do that final procedure, that substantive test of details. What was listed, what was up there that's listed up here that's not in that list that I talked about? It's the audit report. It's important to note the audit report is the opinion being generated by the auditor that is developed from all of our testing, okay? So it doesn't go in the bucket, it's the result of us putting stuff in the bucket. That's how we think about it. The current file of the auditor's working paper should generally include what? All right, so current file means the current period under audit. So we're looking for something that relates to the current period. Flowchart of the accounting system. Could that change from period to period? Yes, but generally it's going to be pretty static, okay? Organizational chart, same thing. Copies of bond and note indentures, those are going to be pretty consistent over time. The only thing that's going to change dramatically from period to period is a copy of the financial statements. Financial statements will change from period to period. The permanent file is just the opposite. So what is going to be contained in the permanent file? Things that are stable, that will change moderately, but will not change significantly over time, okay? So what's an example of this one? Review notes. Review notes are going to change from period to period. Scheduled time spent on the engagement, that will change from engagement to engagement. Correspondence with any legal counsel, that will be different because there will be different circumstances every year. So narrative descriptions of any accounting system and control procedures, they do change, but not significantly, not as much as the other ones do. So D is our answer. And then 529, man, we're just flying. Okay. The substantive analytical procedure known as trend analysis is best described by what? So remember, we had three types of analysis we talked about. Trend analysis was our first, and we're going to get back to that. Ratio analysis was our second. That's looking at financial ratios to determine what numbers should look like or what we'd expect them to look like. And if they're out of sorts, we're going to investigate them further. For example, if you see a current ratio of 0.2, what do you think about that as an auditor? What do you just think about that as a human being? You see a current ratio of 0.2. You're like, yikes, yikes. That's the exact word you should use. In fact, if you see that on the exam, I expect to see the word yikes on it. Okay. So current ratio means that your current assets are 0.2 of your current liabilities. You can't meet your current obligations with your current assets, which is certainly problematic. All right. So that's the ratio analysis. We also talked about expectations, which we're going to have develop a massive expectation here shortly. It's reasonableness analysis was the term we used for it. Trend analysis is just looking at the changes or the variation over time and trying to develop an expectation for what's going to happen. So examine if changes in account over time. That's pretty clear cut. That's our trend analysis. That's all there is to it. Also, I want to make a note of this because this always comes up. When you're looking at answers, you generally want to go with what your first intuition or your first inclination is. Questions of this nature are often written to be subjective and try to fool you. So if you look at this and you say, develop a model to form an expectation, you have financial data, non-financial data, both test account balance, so change in account balance between account periods. Like that's a longer, more evolved answer. That's probably the correct answer because Dr. Barnes is going to give me something more complex rather than less complex, which is totally not true. All right. I'm looking for what the answer is. It's not ever necessarily going to be what is the most evolved possible answer. It's going to be what is the correct answer. I tell students this all the time and say it's not always going to be correct to do, but it will be correct more often than not to go with your first inclination. I was at the DSP trivia thing on Wednesday, and they had one of the things called company slogans, and it said the ultimate driving machine. I was like, BMW. Wait, is that right? I was right. Okay, so and my first instinct, I was right. We got 6 out of 6 out of that, by the way. We were the leader after that time. Yeah. Unfortunately, we didn't win. So that's my embarrassment. Yeah, my bad. I didn't know anything else in the trivia competition, so that's the problem. Sorry, I'm chatty today. Which is probably bad because we need to actually get on to other stuff. Okay. For each of the following specific audit procedures, indicate the type of procedure it represents. So we've got 8 procedures, which is not all, but we're also going to be talking about 533. For each of the procedures, identify the category or the assertions about class of transactions, the primary being assertion being attested. So here's what we're going to do. Is we're going to go through each of these, all 10 of these, and we're going to talk about 3 things. You're going to first of all tell me what is the procedure being performed, okay? Then you're going to tell me does it relate to account balances or transactions and events? And then you're going to tell me which assertion or assertions, some of these are a little bit muddled. Okay? Some of these are very clear, but some are a little bit muddled. Assertion or assertions does this represent? Now, the first one should be pretty straightforward. Sending a written request to the entity's customers for requesting that they report their amount owed to the entity. This sounds like a third-party request, which by definition is what type of evidence? Confirmation. And confirmations are always test of what category of assertion? Always, 100% of the time. Nope. No. There we go. Yeah, that's the other one. Okay. The reason I said nope so nonchalantly is that it's important to remember confirmations are never a test of controls, and tests of controls always relate to transactions and event with the entity, at least as far as we go. Always should probably be put into quotation marks because we do have some entity level controls. But for the most part, confirmations, account balances, test of controls, transaction events, those don't overlap. So that's why we cannot use confirmations as test of controls. By the way, have I said that statement enough? Is it got ingrained yet? I'm going to say that I've said it enough, and yet it's going to be on the exam, and somebody's going to answer. Confirmation is the test of control right here. It's like, yeah, you think you're not going to be fooled, but I'm not necessarily going to ask it to you that easily. Okay, so be vigilant. What does Mad-Eye Moody says in the Harry Potter books? Constant vigilance. Of course, he was a bad guy in disguise, so maybe not constant vigilance. I don't know. Okay. Examining large sales invoices for a period of 2 days before and after year-end, determine if the sales are recorded in the proper period. You can't see it because it's cut off, ironically enough. Okay, so what is the test being performed here? So these are accounting documents, so we're doing what with accounting documents? We're inspecting those records and documents, inspection of records and documents, okay? What type of test is this? Is this a category of assertions? Are we testing transactions and events, or are we testing account balances? Yeah, so these are invoices. So these represent transactions that occur with the entity on a daily basis. That's how you make the delineation. If we're talking about account balances, we're talking about balances that are owed by the entity. If we're talking about transactions, we're talking about individual items. All right. So I kind of spoiled it. I didn't even intend to. It's just the word that came out. What is the assertion that's being tested here? Cut off. Yes. Again, which is kind of funny given the way that the screen works. Okay. Agreeing the total of accounts receivable subsidiary ledger to the accounts receivable general ledger account. All right. So this is an interesting one. So be very, very careful in the wording. The wording will not always give you a clear signal and indication. They probably should have used a different term here, but I'm a little bit pleased on this because this does test your knowledge. So what is the, first of all, the type of evidence that's being collected here? There's actually two different ones you could actually use here. Both of them are relevant. So these are accounting records. These are items that we're examining accounting records. You could set inspection or records documents. That would have been fine. Okay. Is there a more deliberate test that we could have used that said that we're doing, since we're the ones doing the agreements? We're reperforming tasks that the client is doing, so we could actually say this is also a reperformance test. I would make the argument that those are both relevant. All right. Now, it's not necessarily clear. This is a little bit more of a muddled signal, like I said, but you can make an argument there. What are we dealing with? Are we dealing with account balances or transactions and events? Account balances. That's cleared by, say, the ledger and the general ledger accounts. Okay. Now, here's the tricky one. What is the assertion testing? We see the word agreement, we're going to naturally think VAA, but is it VAA? Everybody's like saying, I want it to be VAA, but you can probably say it's a trick. It's not VAA. And the reason why is you have to think about what it is that's being compared to one another. Talking about a subsidiary ledger, which is information that flows upward into the higher points in the system, that's going to be part of the record. Now, you make an argument, isn't this part of the system as well? It says yes, but this is the source record for eventual other items. So all the subsidiary records are aggregated together to form the general ledger account. What do we say when information flows upward? What kind of assertion is that? The completeness. That's a completeness test. Okay, so that's what we do. So we have to use a loose definition. It's not always going to be direct source documents like invoices or receiving reports or stuff like that. If we're talking about anything that moves directionally like that, that's going to be a completeness test. Now, again, I'm not going to give you something that difficult on the exam because this is really, really confusing the way it's worded, but I do think that you need to think about these things as you're answering these questions. Discussing the adequacy of the allowance for doubtful accounts of the credit manager. Okay, so when we talk to people, what do we call that? That's inquiry. That is an inquiry test, okay? What is our category or class, or category of assertions? Account balances or transactions and events? Account balances, yes, because we're talking about the allowance for doubtful accounts. And as far as the assertion, let's go ahead and identify the assertion. So adequacy, what's another word for adequacy? In other words, VAA. So VAA could actually be used there. So valuation allocation, so the proper allocation. Or you could even say accuracy if you want to get into that. Yeah, accuracy there. I want you to make a note of this. This is going to be something that you should remember throughout the semester. Okay. We're going to talk about the allowance for doubtful accounts multiple times throughout the semester. I cannot think of a certain instance in this course or the other auditing course that I teach that I've ever talked about allowance for doubtful accounts that's ever doing anything other than relating to VAA. Every single time we talk about the allowance for doubtful accounts, I just automatically default it. Oh, it's got to be a VAA question. And it always has been. Okay. So if you see allowance for doubtful accounts, you should think VAA. Is it always going to be like that in every instance you'll encounter in the real world? Probably not. But in every single instance in this course, I think it will be. Now, if it's not, call me out on it and say, hey, Dr. Barnes, here's an ADA question that is not VAA, and I'll say, my bad. All right, my bad. So keep an eye out for that. But for the most part, you can kind of default to that. Comparing the current year gross profit percentage with the gross profit percentage for the last 4 years. What type of procedure is this? Looks like a trend analysis. So we're going to be talking about this as an analytical procedure. I heard a story that there was people in the classroom over there. I was yelling about analytical procedures in my graduate class earlier today, and the people in Moose's class. It was Dr. Demir's class. Yeah, in Moose's class were just like giggling because they heard me say talking about analytical procedures. Yeah, I was getting on my auditing students or my seminar graduate students. We were talking about a very complex CPA prep question. And I said, what type of procedure will we use to actually calculate interest expense? And they were like looking at me like, we never asked this question before, Dr. Barnes. And I'm like, you've got to be kidding me. This is an analytical procedure, guys. Come on. You're better than this. All right. So if you know any of the graduate students, you can get them a hard time about it. Okay. It was a difficult question. It was not a simple question, but it was something that we had to eventually get to. All right. Examining a new plastic extrusion machine to, hold on, we haven't finished the last one. Okay, sorry. What are we testing? Are we testing transactions, events, or account balances? Well, it's gross profit, so that sounds like an accountant income statement. So it's going to be an account balance, okay? And we have two possible assertions with respect to analytical procedures. Which one's the most likely one here? VAA. I think this one's a pretty clear VAA test here. Okay. What was the other assertion I said could possibly be used? The other one. You're on the right track. Completeness. Completeness can be tested. Very rarely is it completeness, but it can be completeness in some scenarios. Okay. Examining new plastic extrusion machine ensure this major acquisition was received. Okay. So this is an easy type of test. What is this test right here? Inspection of tangible assets. Very good. Okay. Are we talking about a transaction event or an account balance? Now, this is a tricky one. Okay. I know you want to say it's got to be transactions and events, but are we concerned about this individual transaction, or are we more concerned about what the balance of an account is on the financial statements? Say the latter. Okay. We're more concerned about whether or not the PP&E is fairly calculated. We'll understand that more in detail when we get to testing fixed assets. We'll understand why testing additions is so important. But for right now, you can say, if we're going to be testing inspection of tangible assets, then almost always we'll be talking about account balances. There's only one assertion that we can test for inspection of tangible assets. Which one is it? Distance occurrence. Yes, you are correct. You are correct. Okay. Here's where things get a little bit dicey. All right. Watching the entity's warehouse personnel count the raw materials inventory, which sounds like something you did for other part of the assignment. What is it called when you watch other people? Observation. Okay. We're talking about inventory balance, and we're probably talking about account balance. Here's the tricky one. Which assertions are we testing through this observation? So there's actually multiple assertions, and it really depends on certain factors, as we're going to get into when we talk about the EWC procedures. I have down completeness and existence occurrence. You could have also included valuation, allocation, accuracy. All of those are valid. There may even be some argument for cutoff testing, given if you are looking at certain situations, certain circumstances, certain situations. All of those are possible answers. Our primary ones, I think, are going to be completeness and existence occurrence. All right. Performing test counts of the warehouse personnel's count of the raw materials. So we are not, as auditors, going to test everything. We're not going to do test counts of everything, but we might actually want to check and make sure that our results match what they're doing. What does that sound like to you all if we actually perform test counts on our own? Reperformance. Yes, we're reperforming what the client is doing. Okay. What are we testing here? It's still account balances. What are the assertions we're testing? Still the same assertions. Okay. Still the same assertions that we'd be talking about before. Obtaining an answer, sorry, is that right? Okay, obtaining a letter from the entity's attorney indicating there were no lawsuits in progress against the entity. All right, so third-party requests, what do we call those? Confirmation. What did we say that was always the focus of confirmations? What was the category of assertions? Count balance. And then what assertion or assertions could we deal with here? There's actually a couple possibilities here. Obligation. That's obligations I can see an argument for, but I think there's some ones that are a little bit easier to identify. I think you're right on our rights and obligations just simply because of what we're talking about. We'll get that. So I think it's a little bit easier in presentation. Presentation would actually be relevant. There's actually multiples of them here, but the two I'm looking for are two of the big three. So if we're talking about contingent liabilities, because we're talking about lawsuits against the entity, which is the reason why obligation and presentation would both be relevant, because they would have to be disclosed and they would have to be present. But if we're talking about a contingent liability, we're talking about making sure that liabilities actually get recorded. If we're concerned about something get recorded, then we're concerned about completeness, okay? Completeness, all right? And what are the rules back that you learned back in 303 regarding contingent liabilities? Whether you have to accrue something, it has to be reasonably estimable. So if it's reasonably estimable, then we have to know what that estimate is about. So we're concerned about BAA, okay? Again, that was a tricky one. It was a tricky one, and that's some good rationalization on that. In a good way, not in a bad way. All right, this last one, this one's a nightmare. So yeah, agreeing the prices used by the entity's billing program for pricing sales invoices to the entity's approved pricing list. Now, to their credit, the book is actually approved on this. This used to say tracing instead of agreeing, okay? Which this was not a tracing test, by the way, which will kind of give you some information about what the assertions are. But the easy part, what is this going to be if we're looking at documents, or the documents that are system items generated by the entity? Section of records of documents, yes, okay. What are we testing here? Well, we're talking about sales invoices, and that's going to relate to transactions and events. What are the assertions? I think there's one easy assertion, given the numbers that were involved. And when we talk about quantities and numbers, we're probably talking about BAA, okay. But I also think that there's a directional analysis because we're starting with invoices and matching an approved pricing list. Depending on what is generated first or what direction we go, I think you can make an argument that there's an existence occurrence test there. But I think BAA is the primary test with existence occurrence being the possibility afterwards. That one is not an easy one. I have existence occurrence or E/O in my notes, and then I have in parentheses maybe. Okay. As with every question, it depends. It depends. So, all right, you guys ready to do some analytical procedures? How many people think they got this analytical procedure completely correct? Are 100% confident that they got it? All right, so we're going to talk a little bit about this. So Western University, and let me go back to this. So basically, we're given some information about their total attendance capacity. And so they wanted to develop an expectation on this and use one game. I believe it was their game that played against Kramer College. And so they said, here was the statistics on this for Kramer College. The box seats were $12 per ticket, $8 per ticket for the end zone seats, and upper deck seats were $5 per ticket. And then total attendance was allocated as follows: 70% was in box seats, 20% in upper deck, 10% in upper deck seats. And that was kind of the default. So let's go ahead and calculate the default. Now, this was the actual figures for Kramer, but they assumed that these would be the figures for 4 of the games, or at least that was the expectation they set. So this is pretty easy for the first part. 24,000 seats, all right. 70%, 20%, 10% breakdown. There was also the free seats. That was an additional piece of information. 500 seats were given away as seats to the players' family and friends. So you had to add those on there. So 70% times 24,000. Can't do the math in my head, but I do know that if you add 500 to that, you get 16. I guess I can do the math. I can subtract 500 from this. 15,800. See, there we go. All right. So 70% times 24,000, 15,800. Add 500 seats, you get 16,300. And you get 195,600 for the box seats. 20% times 24,000, that's a little bit easier. That's 4,800. And then multiply that times $8, you get 38,400. Then 10% times 24,000, 2,400 times $5, 12,000. So $246,000 for each game. That was their expectation of revenue for a single game. There are 4 games that meet this criteria, so we can actually calculate that as 984,000. Yeah, question, Kurt?
Why include the free seats in the revenue?
I've got a good answer for this. So, all right, yeah. So they're subtracted out. My apologies. They're not added in. Okay. Yeah, they're subtracted out. So it's actually 16,800, not 15,800. They're subtracted out. So the only thing that's generating on 16,300. So, okay. We're on top of it. No, you were absolutely right. I needed to clarify that because I totally spoke wrong, because that's what happens when you get old. You'd think I'd slow down my speech as I get old too, but that doesn't. So 984,000. Is everybody on board with that? 984,000 for this. All right, here's where things get messy. Now we've got a few different games that have got some different assumptions. So Bloomington University is expected to be 30% higher than total average. Mixed seats be the same, but ticket prices are also 20% higher. Now that's not particularly difficult if you used a spreadsheet. Okay. By the way, did anybody use a spreadsheet for this? Okay. I'm so proud right now. Yeah, so proud. All right, so you can use the spreadsheet. You just have to multiply the original figure times 1.3 because that's 30% addition. And then you can multiply these numbers, these prices times 1.2, and then everything else stays pretty much the same. All right. You have to subtract out the 500 seats from this and then multiply it times 70% times 21,340. And you come up with 307,296. The breakdown of here stays the same. You get $385,920. All right, then we have our in-state rival. Let's just go back and make sure that we know what the in-state rival is going with. Okay, so draw 20% more fans than a normal game, with 75% of those fans buying extra box seats, 25% purchasing upper deck seats. They're really, really stretching on this one. They're just like saying, we really want to test the computational skills of people in a qualitative course. So thank you for that, McGraw. I do think this is an interesting activity, but yeah, it's needlessly complex at times. So Norwalk. 20% increase. So the original 24,000 times 1.2. The way the seats break down is that there's 24,000 that are going to be seating from Weston, and then 48 people from Norwalk. 75% going in the box seats, and 25% going upper deck. So all we have to do is add 3,600 up here to our original calculation, and then we add the rest of the 1,200 down here in this one. And which you can tell because it's just this number times 0.75 here, 0.25 here. All right. So 238,800, 38,400, 18,000, we get 295,200. Then our final one is Westport's, the evening game. This one's one, there's an interesting story, a sordid story about my histories with McGraw-Hill and then to me telling them they should do stuff and then not fixing problems. But basically what happens with Westport is there's no extra, the night game, there's night game, they're increasing the ticket prices by 10%, but attendance is also 5% lower, with each type of seating suffering a 5% decline. Now, interestingly enough, they did not have this blurb down here about how only 475 box seats were expected to be given away in night games. So there was always an argument amongst my students is it 500 seats being given away or is it 500 minus 5%, which is 475? And I argued with them and said, I think it's 500 because people aren't just going to pay, but then people were just not showing up for the game. We all got into an all-in argument and we all had different numbers on this. And then McGraw-Hill eventually changed the textbook to clarify this. So I no longer get to argue my point of view. I was wrong. All right. So in this one, 10% less here, or sorry, 5% less here, so 0.95%, 10% increased ticket prices, 475 free seats instead of 500. So we subtract that from the total and we get 257,070, which is $1,922,190, which is a lot of work for not even being done with the problem. All right. So we've got an estimate. What was the recorded amount that was here in the problem? Okay. So we're developing a recorded amount for the analytic. Let's see. It's 2.2 million. I don't remember what this is. It's down here. Okay. Yeah. 2.2 million based on this. Is the difference between that large enough to prompt further consideration? So what's always the answer to this question? It depends. What does it depend upon in this circumstance? Tolerable difference. So what is our rule of thumb for tolerable difference? 5%. 5% of the recorded amount. So 2,200,000 times 0.05. Our expectation needs to be within $110,000. So 2,200,000 and 1,922,190. We're not even close. Okay. Not in the ballpark. Which, by the way, if you're working on revenue analytics, that's probably going to happen most of the time, which is the answer to the part 3 of this question. Why do we think that we had so much success with the interest expense calculation on Wednesday, and then we do this analytic now, and we're just like, this sucks. This is not even where anywhere close to the ballpark of what we need to do. So what are the factors that go into developing an estimate for interest expense? You've got monthly average account balance, which is pretty stable. You've got interest expense, which is or interest percentage is pretty stable. All you're doing is multiplying two numbers against each other. There's no real factors that go into the calculation other than those two items. It is a very simple estimate to calculate. If you have consistent numbers that you know everything is going to affect those numbers, then developing an estimate is very, very helpful and very useful because any deviations could be easily identified. What about this situation where you're trying to develop an expectation for revenue? What kind of factors go into the revenue generation of many organizations? Only one or two things, or 1 or 2,000 things, same difference, So could we actually identify a whole bunch of different factors that might drive different conditions? Like what was not included in here that affects the attendance at sports games? Got some student athletes in here. I probably should know this.
Homecoming game.
Yeah. So they talked about different factors. What'd you say, Ethan?
Weather.
Weather. Yeah, weather. You had any experience with that? A little bit. Yeah. Okay. So yeah, weather can go into affect the attendance on there. Yeah, if it's extremely hot or if it's extremely cold, unless you're an NFL fan, extremely cold doesn't matter apparently in that situation. But so yeah, weather can go into the factors like that. Are there other external environments as well, or factors as well? So there are things that we can talk about that affect in the micro level, like factors like if you've got a big block of fans and for some reason they've got a conflict, they can't attend there. They may not show up in large amounts. What about the win or losing record of the team that's going to be played? Interesting question. In sports, do people tend to attend less frequently when their teams are losing? If you don't know the answer to that one is yes. Okay. Yeah, it happens. Yeah. So yeah. So it's interesting because we got this big sports game coming up this weekend. Has anybody heard about it? Yeah. Those are the teams that are doing really, really well. So it's going to be very well attended, what I understand. And there's going to be a lot of people watching. I don't know. So most people said they watch for the commercials. So yeah, a lot of factors that go into the revenue generation here of this particular item. Did we capture all of those factors, or did we even capture a majority of those factors? I don't think so. And that's one of the problems with using revenues or and analytics to try to predict revenues. There's so many different things that can go into the prediction. So we're developing analytics, we're developing estimates. One thing that we want to be aware of is these can be very, very useful for both estimation of very, very simple to calculate amounts or looking at trends or ratios over time. They're generally not good for very complex analysis, very complex details where there's a number of different factors. That was basically the lesson of this one to take away is that we did this really, really ridiculous analytical procedure that probably took you all 30 minutes to an hour to put together. And you're just kind of like saying, well, that was useless. It's not anywhere close. That was kind of the whole point is that it's complex and it should be helpful and viable. And yet it's not because we didn't even capture, I would say, a fraction of the factors that go into the generation of revenue. Which now that I say this, it's probably one of those things you're like, well, thank you for wasting our time, Dr. Barnes. I spent a lot of time with this homework. So that's okay. It's always good to sharpen those Excel skills. It's always good to sharpen that. All right, let's go ahead and get into the last part of the assignment. So we're doing an inventory count. Now, I want to point something out that was noticed on here because this is going to drive a lot of the factors here. So first of all, one of the things you had to do is you had to compare status report here for the warehouse that was specified, and you had two warehouses. You had Las Vegas and then Richmond, Las Vegas and Richmond. And then you also have these inventory tags. Now, let's go ahead and specify what these represent because this is really, really critical for understanding. All right, so when we talk about these warehouse reports, where does this information come from? Sheet of paper that you gave us, Dr. Barnes. That's the word it comes from. In an inventory count, where would this information come from? The client's accounting system? Does that make sense? Okay. So we're talking about something that's on record. Okay. Now we've heard that term before. This is really, really important. Okay. I'm not just saying this anecdotally. It's actually very important for understanding. What about these count tags? What's going on here? What are these tags? These are on like they've got like big pallets and stuff with these tags on them. What's happening with these? So they've got people that are counting. When they finish their counts in particular areas of particular items, they attach this tag to it. Say, for this particular piece of inventory, there were 605 items counted by Tom Jones. Okay. There were 100,417 items counted by Tom Jones. Again, Tom Jones is a very effective worker. Okay. So if we're talking about this is the warehouse. Okay. This is the warehouse. What usually accompanies items in the warehouse? We're talking about physical items within the warehouse. We actually have got information that represents what should be going in the system. These are our source items, okay? So again, record, source, all right? Record and source. Now, the way they refer to these in the Excel assignment is they say, this is a sheet, because this is a sheet that came from the system, and they refer to these as floor, okay? Because this is what's actually counted on the floor. Now, why is that important? Because in one circumstance, on the Excel spreadsheet, one circumstance, you started with the floor, stuff that was counted on the floor, and then you compared it to the information that's from the system. In another circumstance, you start with the stuff in the system, and you compare it to the counts on the floor. Now, here's the $100 question. I mean, $100 proverbially. I'm not going to give you all $100 for this. All right. I guess I could have made any number. $10 million question. $1 billion question. All right. So, does this imply a direction? Yes, that's what I was trying to get to, is it implies a direction. If we're starting from the floor and moving to the sheet, we're going from source to record, which implies bottom to top and completeness. Yeah, completeness. Okay. If we're starting with the sheet, we're starting with sheet and going to the floor. We're starting with the record, going to the source. We're going top to bottom, which implies existence occurrence. Okay. So now you notice that over here it says describe any violations of management assertions. That should give you a clue as to what assertions were violated when we had count mismatch. So what are we going to do? We're going to go ahead and we're going to compare the numbers. Well, we'll do one manually, and then I'm not going to do the rest manually because I'm really lazy. All right. So, yeah. So what do we have? We have paddleboard leggings. Is that what it's called? What are paddleboard leggings? I have no idea. Okay. All right, that's your assignment for next Monday. Tell me what paddleboard leggings are. Anyway, so we had to actually look this item up. I guess we can look up by the number 11740. This document's much bigger than I remember. Okay, so 1616. That's what's in the that's on the sheet. So that's what's in the system right now. Okay. Then we're going to look and find the this one right here. 1616. So we have a match. Are there any violations, any problems here? Answer is no. We can just go ahead and enter 1616. We enter 1616 here. We enter 0, and we're all good. Everything's great. Everything's peachy. All right. Let's go ahead and go down to this one right here. Now I'm going to rely on you all for this one because, like I said, really lazy. All right, especially on a Friday afternoon. So, what was the quantity of the inventory ID 11640 on the sheet? I got 87. Did everybody else get that? I guess I could just look at my solutions manual. That's an easy way of doing this. What is the quantity on the inventory status report? Okay, what is the information that's on the sheet? I actually tested the wrong one. I should have started with the count tags first. My bad. So we're starting with the information that's on the count tags. We're looking at the count tags. And the quantity of the sheet was 0. Okay. I realized the confusion now because I was talking the wrong way. So the count tags are here, and we looked at the sheet and we saw the sheet. So what does this tell you? Just based on notice, we have stuff in the warehouse. It's not in the system. It did not get recorded. If it's not recorded, it's a violation of completeness. All right. We're going to do one more on this page. So looking at the count tags, I've got 10576, and this is going to be the count tags for the Richmond warehouse. How many do I have on the count tags? 267. Okay. What about the quantity on the inventory status report? 276. Do we have a recording issue? Yes, we do. Did it not get recorded at all? What is the most likely explanation here when you see 267 and 276? Yeah, the numbers were transposed. Okay, the numbers were transposed. So, like you said, this is something that was recorded, but it was recorded inaccurately. Do we have an assertion that deals with accuracy? Yeah, BAA. Okay. So even though our primary assertion in this area is completeness, we are concerned about overall assertions in other areas as well. We know that this was recorded, but it was recorded at an inaccurate amount. We can say BAA was violated. Now, by the way, if you were filling out a worksheet and in the real world, you wouldn't just put BAA, you'd put it in the explanation. It appears the numbers were transposed, which is a violation of the accuracy assertion, something along those lines. But like I said, I'm not typing out more than 3 letters. I've earned that, okay? I have earned that. One more. So the other numbers they've matched, I'm going to assume that you did those correctly. But we've got one over here for the travel toiletry kit. Now we start with the inventory status report. And what was on the inventory status report for this item? 570. What was on the inventory count tags? 0. Okay. So we've got something in the system that says there's 570 items that have been recorded. Okay. We go out to the floor. We can't find them anywhere. They are not in the warehouse. So they were recorded, but they do not exist. They do not exist. So this is a violation of existing occurrence. To show you how all lazy I am, I'm going to type EO. I'm not even going to put the slash there. I'm just going to put EO. Okay.
You have to push 2 buttons for the.
That's right. It's too much work. Too much work for a Friday afternoon. So does everybody understand the logistics behind this? Does everybody understand how this works? We're testing primarily completeness and existence occurrence, and that really depends on the direction, okay? Now, the questions always come up. What happens if you look and see there's something like a 0 on the system here on the inventory status report, and you see an item here where it's in the warehouse? Like you're testing this particular item, like we'll say garment bags, okay? And the garment bags has no items in the system, but the inventory count tags had 895. Would it still be an existence violation? No, because remember, we're concerned about where does something take place and where is it absent. So if we know that the count tags say that there's something in the warehouse, that means something is present, but it was not recorded, okay? So you do have to read through this a little bit. Just because it appears on one spreadsheet doesn't automatically mean it's existence occurrence. You have to say, what is the gap? What we're missing? All right. So 3 possibilities. 1, not in the system. If it's not in the system, it was not recorded. It's a completeness violation. 2, it's not on the floor, but it's in the system. If it's not on the floor, means it doesn't exist. It exists as occurrence violation. 3, it was recorded, but it was not properly recorded. It was recorded at a different amount, which means it's a violation of VAA. Now, are there possible assertions that we could be concerned about? Yes, but those are the ones you need to be aware of for the upcoming exam. All right, clear on that one? Great, have a great weekend.
Yeah, it sounds familiar.